Big decision from Jerome Powell to go 50 bips today. I love it. I like that there was some surprise introduced and that Powell effectively surprised the market, or at very least kept us guessing up until the end. Unless you're just going to have Fed funds set policy for you. If you're going to have a committee and you're going to have a chairman, then you might as well throw in some surprise and keep markets active. Risk radar looking okay right now. The red light on stocks not too insane as we faded today. Bulls basically fumbled on the 1 yard line, which means that there's a major potential here for bears to make a move, but they've also got a long ways ahead of them to actually have some meaningful pressure in stocks. I do think today's fade is definitely frustrating. And like I said before, for stocks, it's basically a technical case at this point. Maybe I'm going to be wrong that we don't get stuck in a range again. That's really the only conviction view that I've had. I've got the red light because the Nasdaq's trending lower still and the S&P hasn't put in a closing high. If we do break out of the downtrend in the Nasdaq, if we do get a closing high in stocks, then you just go straight green. The reason why I haven't flipped it yellow is because I thought we already did this whole range trade at 5,600 and that we wouldn't get stuck here again. I might be wrong about that. But bulls also were wrong to try and take 50 bips and run with it today. But even if you say that this is the best thing for the economy, which it probably is, doing more, that was the whole reason why I argued for 50 yesterday, because the game theory favors it for Powell. It's the, I think, least risky thing for the economy, and also the least risky for him to be able to at least look back and say, I tried to land the plane here. So that came true. But there were a few things here today that do kind of change the playbook a little bit. And one that I wasn't sure about, which was what would happen with the dollar and bonds. I've had the yellow light on the dollar, and that's going to hold because today we had a bounce back in the dollar that was pretty compelling. You saw that generally the greenback is fighting to hold the 1 year lows. So perhaps there's not as much juice to squeeze from the bond bull trade and the dollar bear trade at this moment. But it obviously has been a big one over the last several weeks. Arriving at the 50, though, might change some of the trajectory. The reason I've had the green light on bonds for a while and the yellow light on the dollar, mostly the green light for bonds has been high conviction that the Fed would go 50 and that the market would have to get ready for that. But once it actually happens, by going 50, the Fed here creates a better possible outcome for the economy, arguably a stimulative one. That means that the terminal rate at which they stop cutting doesn't have to be necessarily as deep. If you believe that changing rates has a positive effect on the economy when you drop them, then that should improve the outlook for the economy like we talked about with Cullen Roche today. Look at the way the 30-2s are blowing out. The 10s and the 2s are moving as well, but the 30s and the 2s are what I've got here, and they're going vertical. That's because the long-term duration in bonds is saying the economic outcomes are improving by virtue of the Fed giving us some help here by cutting 50. But that also means then that bonds could have some selling pressure. That's why the light for bonds has now got to go yellow after the big rally we've had, because we need to see how the market's going to assess kind of the circularity effect of rate policy in the bond market. That's the whole point of duration, is that when you do change the future by applying some support now for markets in the economy, maybe the Treasury bid fades a little bit here. Maybe you get yields to move back higher. I don't think stocks should have a problem with yields going higher from here. I think that's what you want. But if it's rotation in the stock market at the price of tech valuations, then it's going to be hard to get a big breakout. That's why I'm still holding the red light there for stocks and crypto. Obviously, the chart still looks weak. Bitcoin faded again today. If Bitcoin can't rally on 50 bips, then what in crypto is going to rally at all? I'm still thinking we should get a big move by the time the week is over. Jobless claims should be live. Every economic data point should be live. Thanks for tuning in. Thanks for watching us ahead of and into the big decision from the Fed. Hopefully you had the bet on 50. Have a great night.